All right. Here we go. Another day, another dollar. August 8th. Today is 8/8/24. And I want to talk about very particular things today. Is the stock market maybe right before a bigger implosion? Could it be possible that it happens before the election? Is it possible at all? Or is this all just nonsense? Like what's going on here? And I want to look at a couple things because yesterday when I did my video, I said like this recovery in the S&P did not convince me. And as you can see, we actually went down quite strongly. Interestingly enough, the same happened also on Bitcoin, but it recovered overnight over the Asian session. So that's quite interesting as well. Will the stock market follow suit here? We will find out today. That's very important because right now it's still early here in Europe time, so there's plenty of time for US markets to open up. But nonetheless, I thought like this is, even this recovery yesterday, I told you looked really weak to me. And now with this pullback yesterday, it looks even weaker, right? And let's look at some macro facts going on here as well. So that is something that probably a lot of people, is a reason for people to pile into buying the dip. So tech stocks, and those were obviously, without needing to debate that, the driving factor, right? Like the Magnificent Seven or whatever, like a small number of stocks have been pulling up the indices completely. A lot of the S&P 500 stocks actually are not positive even. And so that's why tech has a very special and important role in all this. And you can see like tech is down 16%, but the earnings and the earnings estimates are going to new all-time highs. And that's a bit of a, how can that coexist? Well, the thing is that just because tech companies will make more money doesn't necessarily mean that the economy will do better. Because with all this AI replacing jobs and making things more actually deflationary in a way, that could mean that the whole economy needs to, in some shape or form, reinvent itself. And what we've seen also, that basically what happened after COVID is that K-shaped recovery. Basically is that people's incomes or people's wealth, normal people's wealth, did not really improve, but the stock markets went back up. So basically K, right? Like one were continuously going down and the others recovered in a V shape. And I think that we could be into that. And the reason why I would be still very cautious at this point to buy into is that, look, before the election, there still might be in a lot of turmoil going on here. And essentially, what I believe is that there's always a possibility of a black swan hitting in one day. And I have some things to show you here, actually, to why I think that. So this here is the credit spreads in the US. Like, what is credit spreads? Basically, what it means is that if you have bonds of the same maturity that expire basically at the same time or with different credit ratings, so basically the risk of the bonds is different, and these spreads between the lower end of the risk and the higher end of the risk, they're going just wider. That is not good. It means that there is just so much more risky stuff going on that money is flowing into, and too much risky stuff is just a ticking time bomb that can, at some point just unload. And that's why this is something I would continuously watch. As you can see here, when the last time we had, a widening like this was the COVID crash, right? Or even here in 2008. So that's why you want to keep these things in front of your eyes to not completely lose them out of your eyes or try to trade the market with some lines on them only. These lines, they will be crushed. Nobody cares about these lines when big macro things hit. That's why you need to have some understanding about these things, but still build your database statistical edge strategies around that. That's what I've been doing. And if you don't take my word, let's listen to this quick video here of Ken Griffin, right? I mean,
of some catastrophic consequences if deficit spending isn't brought under control. What is the catalyst for an American debt crisis going to be? So I don't know when that moment will be, when there's an auction that goes awry or when the markets become dislocated. Financial markets, generally speaking, work very well until they catastrophically come off the rails. You don't necessarily get a lot of warning that there's about to be a big event.
The crash of '87 is a great case study. That day I woke up. I was in my dorm room trading then, and the stories of the day were about a small skirmish in the Middle East of frankly no consequence, and the health of First Lady Nancy Reagan. And yet we ended that day with the stock market down 20-some%, and a number of American financial institutions literally
One day.
life support or near death. Happened in one day. One day. There was no big story that morning that would make you think that day might have been the end of the U.S. capital markets as we knew them. There was no warning. And so I worry that the debt crisis may have a similar construct, that there'll simply be a day where a major auction fails, and then you see a panic start to brew in the treasury market.
And that's the thing. The deficit spending in the US is still going ballistic. They're spending so much more money than they're making. And they're still selling treasuries, right? But if there is a treasury auction that fails, that could lead to some catastrophic triggers. And right now, again, we're somewhat on the brink of something like that to happen. And why is that the case? Because, again, remember the yen carry trade that we talked about in the last couple of videos again and again, or the last week? The yen carry trade was a big mechanism allowing to buy bonds. And now, actually, the Fed is in an extremely tricky situation, and this is where we are now. Because if the Fed cuts aggressively here, yen will go even higher, right? Because and every QSIB has flash crash as the carry trade blows up. Basically, they will need to sell. And if the Fed cuts slowly, then it may just blow everything up away because we have a bad economy. And if they keep the interest rates high, then it just will continue to put stress on the system. So what is the Fed going to do? They're literally in a checkmate scenario right now. And there is not necessarily a good solution out of that. In one way or another, one of these scenarios is likely to happen. Now, let's see in which size and extent, but that's really important that you understand that. You see? So, forcing the dollar yen lower and send the whole loop into overdrive, making U.S. assets seems less attractive and pushing equity and term premiums higher. So if the Fed would need to cut less quickly than what is priced into the curve in order to calm the yen, which means asset prices would collapse harder on expectations of conditions remaining too tight. And that's the situation that we're in right very now. Make yourself aware with that dynamic. And if you trade, make sure that you understand, if you trade to the upside, to clearly use risk management, very tight risk management. Otherwise, don't get blindsided by these things. And there's one other thing I want to bring to your attention here, because I keep getting these messages. So look, guys. Trustpilot, right? So there are profiles that carry my name that I have nothing to do with. So this one here is alexdo.de. This is not my profile. I've never run it. Biggest scam ever. He goes under Liebel Henry on Facebook. Who is Liebel Henry? Facebook. What? This is just here a few days ago. I don't control these pages. I don't have influence over them. Look, they use a Gmail email. He is not even my email. There's nothing I can do about that. Obviously, it's upsetting, but it's just nonsense. It has absolutely nothing to do. I did run an old mentorship that's many, many years ago, which was alexduvidari.com. And you see, okay, there's one guy, he said very unpersonal, Carson. Actually, I know the guy who he is. And in fact, he wasn't the most active guy anyway. But I've had really good reviews of people that really put in work and that wanted to learn from me. And the thing is that you cannot make everybody happy, but if you come to me and expect that you will become rich overnight without your own work putting into it, I'm the wrong guy. I've said that many times. What I do is I teach you concepts, how things actually work, so that you can build your own strategy and go from there. And while you do that, I give you my own strategies to see how I'm doing it, so that you can model from there and even put them into action yourself if you want to. So I just wanted to make sure that you understand that. This is the current hedge fund mastery offer. You can see here, for example, Ken, great guy, he came in, he was already an experienced trader, as he says, and he said, Alex, process-driven program has been a great experience, and it greatly helped me to reach a consistent state. So he was struggling with consistency in profitability, that break-even level that a lot of people are in once they get out of this gambling, losing state, and it helped him a lot. Or here, for example, Bartosz was a very much like also more beginning the whole journey. And he said like also the biggest takeaway from the course is how do I look at trading now compared to before, right? And trading is all about creating something that works specifically for ourselves, that has proven and well-tested statistical edge. 100%. So the people that come here, that learn from me in the right way, that pick up really the information in the right way, they think it's good. And, you know, because of this Trustpilot nonsense that I have to deal with, I also set up a track record that I started, like, it's now almost 1.5 years. It's on DarwinX. I will provide more information and details on that as we go along. You know, live trading, numbers don't lie. You know, whatever this Trustpilot nonsense says, this is a track record, third-party verified, independently, real money, and you could actually even copy it as an investor if you wanted. So this is my video for today. Again, if you're interested in specific topics, let me know. One thing I would say, by the way, if we see a crash unfold, my biggest interest would still be Bitcoin, honestly. Because if you don't understand the Bitcoin fundamental story, I have a video that I did in January this year where I represented or basically rehashed the presentation of Michael Saylor from January. Go and watch it right now if you want to learn and understand more about Bitcoin, because if you don't know anything about it, you really, really have to. All right, thank you very much. See you in the next video. Bye-bye.